Good morning. It is Thursday the 15th, and here is today's agenda. The rotation trade accelerates, Trump holds fire on Iran, and silver loses its shine on tariff reprieve.
Tom, let's talk about these markets. The Nasdaq futures are up right now. That's on the TSMC CapEx guide for next year. Tech down yesterday. Silver's down by 3.66%, but it's up on where we were this time yesterday. Don't get too excited about silver. This feels very technical. Brent crude's down by 3.1%. Did Trump just brink on Iran because he's worried that the oil price is going higher? Anyway, we're going to discuss that. The countdown to the opening trade starts right now.
Good morning, everybody. This is the opening trade. It is Thursday morning, the 15th of January. Let's start the programme talking about tech and global appetite, US appetite for tech and tech exposure, because we've got a lot of interesting dynamics, some of them conflicting with each other this morning. So TSMC, the most recent data point, if you like, out with numbers. Those look solid. The CapEx numbers look like something that global markets might get a little bit excited about.
Yeah.
But yesterday we saw a very different story in the United States, a rotation away from tech into small caps, away from tech into more growth names. And so you wonder how those two thoughts rub up against each other.
I can draw a line between those two quite easily. CapEx is going to be extraordinary this year. The US economy is going to run absolutely hot. That's one of the drivers that are going to be there for the US economy. That's why you're rotating into cyclicals. You've got tax cuts, you've got tax rebates, you've got lower oil prices, you've got lower credit card. Trump wants to run the economy hot. Plus, he's got a CapEx story that's extraordinary coming out of AI. And as a result of which, the US economy looks like it's going to reaccelerate. And as a result of which, you rotate to cyclicals and small caps. The question is, can US indices hold up, which has driven the wealth effect, which has driven the US economy as well, if we rotate away from the big cap tech story?
Because of the S&P 500 yesterday, there were 300 companies in the index that actually gained, even as the S&P lost, of course. And the Russell 2000, 9 straight days of gains, outperforming the S&P 500. To what extent is that the story of the year then, in terms of that rotation? On AI, just a reminder, I think it's also a reminder to both of your points, not all AI is created equally. So you have to increasingly, this is 2026, this is going to be the year, you're going to have to look across the stack to find the value. And for the moment, TSMC, that's actually manufacturing the chips and that hardware story, is gaining with a 3-year horizon on increased CapEx.
Software's getting crushed at the moment. Like, if you see the double top on Microsoft, keep watching it, keep kind of keeping an eye on it. Software stocks have not had a good start to the year.
Talking of technology, and we'll return to this theme because I'm particularly interested in also how that narrative around growth stacks up with what we saw on banks, but we'll talk about that a little bit later on. We are going to be hearing, I think, from TSMC at some point this week. Let's talk about what's going on.
Tomorrow, it's basically the interviews today, the playouts tomorrow morning.
There we
CFO.
go. That's exactly right.
We've talked about the energy, we talked about the US economy story, and clearly a key part of that is the Big Mac trade. So a big midterm election coming. And that is a key story and a key theme for us as well in 2026. And oil is a part of that. And I think you made the point that maybe it was the oil price spike that we've seen, not just yesterday, but in the run-up as well, pronounced yesterday, that maybe made President Trump blink. We saw some assets being moved around Qatar, some military personnel. The drumbeat and crescendo seemed to be towards some form of US military strike. And then he came out with a statement on a day when oil prices were spiking that praised, essentially, the leaders of Tehran for stepping back and halting, as he described it, the killing in Iran. Was it the oil price?
Are we being really cynical thinking that? Are we being... I don't know is the honest answer. Can I draw a line between oil prices going higher and President Trump's view of what he should do in Iran? I don't know whether we're going too far with that.
Well, that's what oil prices seem to have been pushed up higher by. That there was concern that any kind of drama and tension and violence in Iran that involved the international community could have an impact on oil supply.
Sure.
Yeah.
But does Trump then back off because he's worried that oil prices are going higher for US consumers? I don't know. I don't know whether you can make that connection.
I will also remind. I was reminding myself of what happened last summer, June 2025, where we got very clear signals from President Trump that he was taking no action on Iran. He said, "Give me a couple of weeks. I'm thinking about what to do." And then we did see action on Iran. So I've absolutely no reason to suspect the same thing happens. But it was just a nice reminder that sometimes we don't have full visibility about what is happening here. Let's talk about metals and what's going on there.
I woke up this morning.
Also a Trump line here.
I don't think so. I woke up this morning, like, silver's crashing. Oh, and it's because of Trump tariffs. And then you look at the silver price over the last 24 hours. We're where we were this time yesterday.
But can't it be both? Can't it be some dial back in geopolitical tensions? And also, and just to underscore what we've heard, the Trump administration basically saying they're not putting any tariffs on place on silver, platinum, palladium and some other critical minerals right now. They leave open the option of doing that in the future.
Silver's gone up an awful lot very quickly. And you are going to get some volatility, and you are going to get days when it's going to drop a little bit. We're back to where we were yesterday. It doesn't feel like that. I slightly worry this morning that we're looking for a narrative to pin on a market move that could just be driven by simply the fact that the market's gone up an awful lot very quickly, and there's a whole lot of kind of hedging stories that are within the market and a whole kind of technical factors that could be in the market as well. So I don't know. Let's see what happens with the rest of the session.
The team at Saxo Bank pointing out that there is a disconnect between the fundamentals and the technicals, and for now they say the price is being driven more by technicals than actual fundamentals,
which would imply that, like, kind of hedging, gamma hedging, whatever's happening within the technical story around silver may be responsible. I don't know the answer, but I'm always slightly, as a journalist, sort of sitting back going, oh, well, we're slightly in danger here of trying to find a story that explains what the price action actually looks like.
It certainly moves a lot.
Yes.
Let's talk about what's happening on the UK GDP front, because I wasn't sure if we were going to have to mention this morning, because it's only 1 month's worth of data, and sometimes that's not, substantial enough to get too excited about. But it is better than expected, which possibly falls in a direction of travel that the market was not anticipating, and it's quite a bit better than the prior reading. Remember, the reading for October was negative 0.1%. Now we have a reading for November of positive 0.3%, which is better than expected. The pound trying to get back to the flat line. That's the extent of the response we're seeing here. But worth noting, because, of course, gilt markets will open in less than an hour's time.
And gilts have been rallying. I mean, the 10-year gilt currently, I mean, it's not pricing right now, obviously, 4.34 by the end of the close yesterday. It wasn't that long ago we were above 4.4 on the UK benchmark. And there is a debate as to whether or not the BOE is a little behind the curve in terms of the need to cut rates because of the weakness and what's happening in the jobs market here. This suggests that maybe it's a bit of a flaw under the UK economy.
How does that fit with the China inflation story that we were talking about?
Disinflation story.
Disinflation story,
it's really hard to read what is happening in the UK. If you listen to what the retailers are saying, it paints a fairly grim picture. If you listen to what people that run pubs say, it's a fairly grim picture. But I think it's about to get better for pubs, which I'm all in favour of. What else have we got coming up?
Let's talk about some of the guest conversations we have coming up. Sri Kochagavindam will be with us, Aberdeen senior research economist. Where is the US economy going? What clues do we have on that front, and on the UK, perhaps, with this latest data hitting the Bloomberg terminal? Bill White, US ambassador to Belgium, great voice to have contributing on the US agenda, the US White House agenda, perhaps, from everything from Greenland to Iran and much beyond. Emmanuel Coe will be with us, Barclays European equity strategy head. How is Trump and his popularity rating having an impact on equity strategy right now? That is something we're going to be talking about. And Emily Turner, HSBC Innovation Banking UK CEO, will be with us to talk about the AI lens through UK startups.
OK, some of the key names coming through on the show, and the interviews, of course, that we will be bringing to you. Also, in terms of what is crossing 9 a.m. UK time, we're going to give you a lead up. We'll break this, of course. The latest shows ECB publishing its economic bulletin. Inflation, of course, around that 2% target for the ECB. We'll get more details there. The Ugandan presidential and parliamentary elections will be happening apparently. And at 1:30 p.m. UK time, US jobless claims. So another touch on the labour market, of course, of the US. And on earnings, we have had some really interesting reaction from the markets to the bank earnings that have come through, with Citi, of course, and Bank of America in focus yesterday, both coming through with a beat, but the market reaction was negative. Today, Morgan Stanley, Goldman Sachs and BlackRock. So we'll break those for you, of course, and we'll give you a preview in this show as well for those earnings. And later, President Trump will meet with the Venezuelan opposition leader Machado at the White House. Again, on the bank story, I thought it was really fascinating. You've both been emphasising the fact that you can paint a picture of a pretty resilient US economy for 2026, given that focus from President Trump on the midterms, the fiscal stimulus, the focus on lower oil prices. And yet the banks, who've also spoken about the regulatory environment being more favourable to deal making, being punished by investors despite beating at least Bank of America and Citi yesterday.
Expectations are up here and costs are going up there. And that's why
Banks have a cost of living and affordability crisis, it seems.
Yes. Yeah. And the market doesn't like it. But expectations are so high.
But I do wonder how it fits with that story we were telling at the top of the programme about a rotation, yes, away from tech in yesterday's session, and more broadly, into other things, into other bits of AI, into small caps. If it is about US growth, would you expect the banks to be playing a role in that and also joining that sort of broadening the rally?
Yeah, maybe. I think which banks? I think maybe you play some of the other banks, more regional bank story around that narrative. But it's going to be, if the Trump administration tries to make it better for the consumer by lowering credit card costs and things like that, the other bank's going to win in that kind of environment.
The Markets Live team saying that this has turned the sector from hope to handbrake, which we'll watch how that continues through the bank earnings stories we have still to come.
OK, what else do we need to know? Thursday morning, the US Homeland Security Department has confirmed the reports of a federal officer shooting a person in the leg in Minneapolis during a traffic stop. Officials say the victim was a Venezuelan illegal immigrant attempting to evade arrest. Meanwhile, the United States is to stop issuing immigrant visas to people from 75 countries. A source says the order is likely to target foreigners that authorities believe could require public assistance while living in the United States, i.e. lower income cohort immigrants. We're told the move would apply only to people seeking to live and work permanently in the United States, not tourists or temporary workers. Impacted countries include Brazil, Somalia and Iran. Denmark's foreign minister says a, quote, fundamental disagreement remains over the Arctic territory following a meeting with top US officials, including US Vice President J.D. Vance and the Secretary of State Marco Rubio. This as an exploration mission of, get this, 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security in the region and to respond to US threats over the island. And a number of private equity firms are said to be eyeing Volkswagen's heavy diesel units. This as the German automaker proceeds with its asset disposal program. Sources say some of the interested parties include EQT, CVC, Bain, amongst others, i.e. the usual names. Evolence, which is what the diesel unit is called, is valued at between 5 and 6 billion. Suitors are expected to submit their first round of bids by February the 12th, Anna.
Coming up on the programme, we've talked about tech, we'll do that more. TSMC beating estimates. European chip makers may be on the move as a result. We'll check on those stocks at the start of the trading day. Plus, Cartier holiday sales have been a boost to Richemont. We will bring you the latest on the luxury sector. Up next, the US economy continues to be the main driver for many markets. We will get a health check on the US economy. If you have questions for our guests, if you want to get involved in any of these conversations around the table, IB plus BBTV Go. That's the function. That's what you use on the Bloomberg terminal. This is Bloomberg. Welcome back. This is the opening trade. We are 45 or so minutes until the start of equity trading. Let's have a look at what is happening on European equity market futures. We are expecting, and actually the futures picture in Europe and in the United States, on the move in the early hours of the European trading day. The picture looks pretty positive now coming into the European session. The French futures picture up by 0.6%. And I wonder, Tom, whether we're going to see a couple of, I was going to say earnings stories. It's earnings in the case of TSMC. It's just sales in the case of Richemont. I wonder if both of those are going to have an impact today, because there is some expectation that, better prospects for capex in tech is going to lift some of the tech stocks here in Europe. And the Richemont numbers looking pretty positive. Maybe that lifts the luxury sector. That plays well for France. All of that in the mix today.
Yeah, Richemont, the strength coming through from the US and the Middle East and the shopping season. When it comes to TSMC, we touched on this, of course, the capex spend. So forecasting for 2026, $56 billion. $56 billion. They got the margin health as well, 62% in terms of the most recent margins for TSMC. Does that mean they can spend more? They will have to spend more on ASML kits. So we're going to be watching ASML, certainly in terms of the chip-making equipment that they ship in to TSMC's foundries, and they could be a key beneficiary today in the session.
Yeah, but it's an enormous number. We're talking about huge amounts of money.
From a company that is traditionally conservative in terms of its capex forecasts.
They're saying they're nervous about the level of capex. That was one of the lines today about just the scale of it.
I can understand why. 75% of their stuff goes to the United States, right?
Yeah.
That is a huge exposure the US has to TSMC. If there was a problem at TSMC, what happens with the US economy, I guess, is a key question.
And that takes us to a potential trade deal between the US and Taiwan, and what kind of commitments the Trump administration have tried to extract in terms of building out TSMC foundries. They have one already in the United States, but for that you need labour and you need components.
Yeah. And you need permitting, and you need all kinds of other things, that electricity that need to go with that. But the build-out, the AI build-out, is certainly a big part of what we're seeing in terms of the economic story in the United States at the moment. And it's just part and parcel of a bigger story. President Trump absolutely throwing the kitchen sink at the US economy as he tries to re-engineer a re-acceleration ahead of the November midterms, tax cuts, tax rebates, big beautiful bill, lower interest rates, lower gas prices, cheaper credit cards. Excuse me, the list goes on and on. Evidence mounting, certainly you could argue that he's already having an effect. Retail sales picked up really strongly in November. They went from a negative number to a positive number. You've got this big rotation out of tech towards cyclicals. The S&P's up circa 1% year to date. The Russell 2000 is up by nearly 7% year to date. The market is rotating towards a more cyclical story. The question is, will President Trump get what he wants? Are we going to see this re-acceleration? What kind of an outcome are we going to see in the United States this year? Sri Kochagovardhan, Senior Research Economist at Aberdeen, joining us around the table to discuss. You're not quite so convinced. Do we get a re-acceleration?
I'm not sure about a re-acceleration. I was just looking at recent data. Start with the payrolls data there. I mean, there's a lot of distortions, first of all, in the data at the moment because of the shutdown, and we're just coming through all of that now. But what we're seeing is a stabilisation in the labour market rather than a re-acceleration. So we're not looking for a recession in the US, but I think it's going to be an uneven path, actually, going forward.
Isn't the labour market data quite lagging?
It is lagging, but I think it's so critical in terms of the outlook for consumer spending going forward. But you're right, there are a lot of boosts coming in terms of fiscal stimulus, but also potentially AI productivity kicking through as well into the economy and providing that boost for the US economy as well. But it's a case of, there's still a cost of living crisis. Inflation is coming down slowly. But we think for now, in terms of monetary stimulus, the Fed is likely to be on pause now until the next chair takes over. And then we think another couple of 25 basis point cuts in the second half of the year. So as we move into the second half of the year, there are a number of factors that will filter through, monetary and fiscal stimulus. But for now, it seems as though, there's an uneven path for growth over the course of 2026, but stable. No recession, but a re-acceleration I'd question.
What do you make of retail sales? They've gone from kind of quite negative in October to quite very positive.
Yes, it has been quite resilient. And also the consumer data in GDP has sort of picked up as well. So that has been quite resilient. But then going forward, is that really sustainable? And I think that's where the labour market, the lagging labour market data really becomes more of a question mark. I think,
So help us join the dots, Sri, between the picture that is in front of us for the US economy, so maybe not re-accelerating, but just maybe stabilising. Why the need for the cuts then later in the year?
Yes, I think there's a real question mark in terms of, I think Fed credibility is still quite strong. That's my belief. And I think the framework is still very strong. But if you look at the composition of the dots, the forecasts stay the same, but the composition of the dots are moving lower. There is a lot of pressure at the moment. In terms of the cuts, I think, again, it's a case of, this uneven path for the outlook for growth is uneven, and it's that easing of the labour market. So if you look at the details, not just in payrolls, hiring has slowed. And if you look at the employment component of PMIs, they are, easing as well. There's more negative now. So there's no, that we don't see a big sort of churn in terms of firing and layoffs, but vacancy rates, labour demand is weaker. So again, I think that's something to watch.
Claims are getting better, aren't they?
Yes, the weekly data is getting better, but in terms of some of the broader picture, again, it's not a case of recession, but it is a case of, just uneven growth and just keeping an eye on that labour market. I think that's where the Fed, in terms of the dual mandate, they're focusing more on the labour market, and that really depends on the next Fed chair as well.
Can I ask you about the UK, Sri, because we had data out this morning, and it's quite a bit better. It's only 1 month, so we typically don't get too excited about 1 month's worth of data, but because everyone got quite animated about the negativity around October, I wonder if they can also get a little animated around the slight positivity of November. So it comes in 0.2%, better than expected, and much better than the last month. I mean, is that what's your broad picture for the growth story in the UK?
The growth story. I think just looking at that particular report, I was just looking at the numbers there. The details actually show the big boost comes from manufacturing production. So I think there's a little bit of a distortion from auto sector because of Jaguar Land Rover coming back online. So I think that might be part of the data there. So again, 1 month I would be a little bit careful of. But again, there it's a case of overall, the 3-month picture is looking close to flat. This is an improvement, but GDP, the 3-month number was 0.1. So again, it's a sort of not a recession, but stabilisation of growth there. Okay. And again, it's a labour market deterioration through last year. And it's now starting to weigh on real income growth. Wages are still quite sticky. It's a problem for the Bank of England, so that's part of the very close call in terms of the outlook for the Bank of England and that close vote last in December. But I think it's, wages are easing. And what is the impact of that in terms of consumption going forward?
We appreciate Sri your real-time deep dive into the UK GDP data. Whilst we've been sitting here waffling on about other things, Sri's been
that dropped 24 minutes ago. Alan Taylor, the BOE, a noted dove, of course, came out yesterday and said inflation in the UK could go from 3.2% now to 2% by the second half of this year. Does that align with your forecast on the inflation trajectory?
We do think that inflation has been coming down, and food price inflation was a big contributor to the recent fall. So there are some base effects there that are impacting the path for inflation, but it's still going to be a bit of a bumpy path going forward. But yes, we do think it's going to head towards target by the end of the year.
Would that suggest the BOE is currently behind the curve? Do they cut in March?
I think they are. They have this. They have to go according to a slow, gradual pace. So I think March is likely.
In terms
of a cut. So this sort of quarterly gradual pace is something that is in line with our view. Yes, so I think they, again, it'll be this debate within the MPC between the hawks and the doves, really sort of looking at where is wage growth. It's easing, but it's still a bit too elevated. And what is the path for inflation from here?
How much of a distortion do you think we get from China exports into not just the UK, but Europe, and deflation?
I think that's difficult to say, actually, at the moment. It's not. I don't have a strong view on that deflation picture from China.
Do you think it potentially pulls the ECB off the sidelines?
I think the ECB is very much on hold. They are at target. I think for us, it's a case of their easing cycle is very much over. There is a potential for an undershoot, but if anything, we think they'll be on hold for the rest of the year and a potential hike of 25 basis points at the beginning of next year. Okay. And that was very much out of consensus call, but I think there are more and more investors thinking the next move is going to be a hike rather than another.
Because the story in Europe will be fiscal rather than monetary, really.
Exactly right. I think the impact, and that's why we're looking for that hike later on, because the impact of that fiscal stimulus and that increased defence spending is going to start to materialise near the second half of the year.
Okay. Yeah. Sri, thank you very much indeed. The BOE potentially going in March, the ECB hiking potentially in the first part of 2027. Sri Kocho-Govindan, Senior Research Economist at Aberdeen. Coming up, the Danish Foreign Minister says a fundamental disagreement remains after meeting top diplomats in Washington as Donald Trump continues his push to take over NATO ally Greenland. The Don Roe doctrine still at play. More on that next. This is Bloomberg.
Thursday morning, good morning. 29 minutes to go until equities start trading, cash equities start trading here in Europe. The futures picture is fascinating. US futures have turned positive. That appears to be on the TSMC capex story. European futures are broadly positive as well. Amsterdam futures are really positive, and I'm just wondering whether that's an ASML TSMC read across. It feels like a logical thing to do, doesn't it? What does TSMC buy a lot of? ASML kit. So let's kind of draw a line maybe there as to what is happening. And I think Taylor Swift is probably responsible for what we're seeing in SMI futures this morning. Richemont stock looks like it's going to have a really strong start. Cartier watches are doing well. Who wears a Cartier watch? Taylor Swift. Maybe I'm stretching that a little bit too far.
I don't think you are. The great Taylor Swift phenomenon is real. And Timothy Chalamet busting those out
Which government
as well.
bonds is she currently buying?
Well,
it's a key question.
Clearly she's not exposed to government bonds because they're doing essentially nothing right now. There's a little bit of a move in terms of yields higher in Germany. Yields up just 1 basis point on the benchmark. German Bund at 2.8 if we flip the board and have a look at sovereign. I'm really interested in gilts on the back of the slightly better GDP data, of course, when they start trading at 8. French OATs at 350. No government collapse as yet in France. Just a move higher of 1 basis point. And BTP's at 346. Not a huge amount of moves. But again, gilts have been performing well, so we'll watch those at 8 a.m. as well, of course.
Yes, we absolutely will. And let's talk about some of the geopolitical developments over the past 24 hours. There have been plenty of them. An exploration mission of 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security in the region and respond to US threats over the island. Meanwhile, Denmark says a, quote, fundamental disagreement remains over the Arctic territory following a meeting with top US officials. Donald Trump, meanwhile, is doubling down on his position regarding the island.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
We need Greenland for national security, so we're going to see what happens. We have a very good relationship with Denmark, as you know, we'll see. But, we're doing the Golden Dome, we're doing a lot of things, and we really need it. If we don't go in, Russia's going to go in, and China's going to go in. And there's not a thing that Denmark can do about it, but we can do everything about it.
For more, we're joined by Bloomberg's Copenhagen Bureau Chief, Sarah Solin. Sarah, good to have you on the programme. So in terms of the results of that meeting, really high-profile meeting, Denmark, Greenland, all both in attendance, along with the Vice President and Marco Rubio, of course, as well. Now, Denmark says on the back of that, there's still a fundamental disagreement that remains with the United States over Greenland. They've set up a working group. Not sure what that tells us. But any sign of progress at this meeting in Washington?
There's definitely sign of progress in the way that once you've set down a working group, it's really hard to see that tensions will escalate from there. The working group needs to figure out if there's a path forward where Denmark and Greenland can agree, maybe address some of the security concern that Trump is putting out there. So I think the sense over here is that there's relief. There's also relief that we're not really looking at a military intervention anytime soon.
So how significant, Germany sending troops to Greenland, what should we read into that? How significant is that? I appreciate there's only 13 of them, but they are German troops and they are going to Greenland.
I don't think it's as much about the number of troops as more that they're actually doing it. We also heard from France they're doing it, the UK, Sweden, Norway. So we're getting a group of European and NATO allies up there. Essentially, it means that we're stepping up security of the Arctic and Greenland, and we're also showing the US that this is something that some of the NATO allies are taking seriously. So if Trump ever were to push forward on his ambition to take over Greenland, maybe by force, there'll be a NATO delegation up there. And how is that going to look on TV? I think that's the play that the Europeans are trying at right now.
OK, a NATO delegation that may number in the couple of dozen, potentially, but maybe that number moves. Bloomberg's Copenhagen Bureau Chief, Sarah Solin, thank you very much indeed with that update. Meanwhile, as President Trump's Greenland ambitions threaten to strain relations with NATO allies, of course, Germany's finance minister urged European nations to get tough if they are to successfully negotiate the current period of global upheaval and avoid becoming, quote, pawns of the major powers. Let's head to Belgium right now and bring in our chief European correspondent, Oliver Crook, for more on the future of these relations. Ollie.
That's right, Tom. We're really focused on the transatlantic relationship at the moment. Obviously, Greenland's sort of stealing all the spotlight right now, but we're very pleased to be joined by one of the U.S. ambassadors to one of the great nations of Europe, the nation of Belgium, by Bill White, ambassador. Thank you so much for joining us in studio this morning. I'd like to begin, because I assume you're getting a lot of questions right now about the transatlantic relationship, the state of the United States, its view of Europe, the kind of friendship that the United States is displaying to the Europeans. Are you getting a lot of questions, and what do you say to the Europeans who have questions about both the nature of the friendship with the United States and where that relationship is going right now?
Yeah, thank you, Oliver. It's great to be here with you and back at Bloomberg. The relationship with Belgium and the United States is extremely strong. We are as aligned as I hope and would imagine we could be together. There may be some things we talk about or maybe disagree on. but there's so many more things that we do get along with Belgium on. And because Belgium is the headquarters of NATO, it is the seat of the capital of the EU, there is much policy and discussion in all of these areas. As I always say, President Trump has been the greatest supporter of NATO that NATO has ever seen. This is the strongest alliance that the United States has ever had. That continues strong today. I think President Trump has raised over $500 billion for NATO. So when I hear people say, will America still be with us with NATO? Or there are questions about, literally somebody said to me the other day, can we trust America? Well, it doesn't ring true to me because President Trump is the greatest supporter of NATO, and he will continue to do that. He's very proud of the fact that Belgium and these other countries have stepped up to meet their 5% spend. And when there are questions about Greenland or Venezuela, these questions come in. And I think people are understanding now that President Trump literally is the peacemaker in chief. He has not started any new wars. We are not at war with Venezuela. We are not at war with Iran. But there are certain national security interests of the United States that President Trump has drawn a red line on. And these are important ones for him to keep enforced. You know, Maduro was a horrible dictator to the Venezuelan people, but the issue of his indictment was that he was drug trafficking into the United States. And now he's going to face justice in a court of law, innocent until presumed innocent until found guilty, if so. And this is the process that should take place.
And I think that many in Europe would like to see the United States, and do see the United States as that very strong ally. But we have had, expanding rhetoric over the last couple of weeks, and particularly from the Prime Minister of Denmark, who says that really this threatens the fabric of NATO if you have some sort of military or hostile sort of confrontation. So you don't see that at all as a sort of risk from the United States. How then do you see a path towards de-escalation as a diplomat and as an emissary of U.S. foreign policy?
Actually, it's interesting. Someone told me the other day that in Denmark she's up for re-election, and a little bit of a spat or conversations with President Trump actually helps her to win her election. And the fact is, we actually want her to win that election because the alternative in Denmark is some politician who may be much more far left than America would like. So two things. I do think that the Prime Minister of Denmark is in Washington at the moment. We are going to have meetings. Secretary Rubio, who I think is one of our greatest secretaries of state that we've ever had, with Vice President Vance, will be meeting with the Prime Minister. And I expect those meetings to be productive about the strategic importance of Greenland to the United States and to NATO and to the world.
And I'd like to shift to another focus for you, which has been trade, so something that's been very much inside of your wheelhouse, trying to build that relationship out with Belgium. One of the things we've heard from some parliamentarians here in Europe is that this NATO conversation around Greenland could delay the vote for the Europeans to ratify the trade deal with the United States. Are you concerned that this sort of spat could endanger the trading relationship with Europe between the United States?
That was a great question, Oliver. I'm actually very encouraged by the significant entrepreneurial, innovative spirit of the Belgian people. We have a huge trade relationship between Belgium and the United States. And any smart business person investing in Europe or European investors back to the United States would prefer to have much less regulation. I think the word is called simplification. Yeah. We would love to see Europe's regulations simplified, if that's the language.
Eliminated?
Much more simplified, if not eliminated. There are some very strange policies which I think have driven business people out of Europe. I spoke to one of the most successful business people here in Belgium, and they would be thinking very strongly about moving out of Europe if some of these things are not more simplified. So we have to push that with the EU.
Well, let's drill down into that a little bit. What are the kinds of conversations you're having with, because again, you are both obviously a sort of emissary for the United States, but also I think for American business. And so what are the conversations you're having? What are you trying to encourage the Belgians, the European Union, to the degree you have contact with them, to diminish those regulations? What are you targeting precisely?
Sure, we have businesses trying to come to Belgium to partner in defense co-production. There are businesses that are coming here for power needs, energy needs. We have Google and Amazon coming here with a $6.5 billion investment for data AI centers. And they are going to have to comply with the ESG regulations of the EU. So there are many different levels of EU regulation that cause American business men and women, successful business, some of the most successful business, to say, I'm not sure we want to go to Europe. There are some of the largest American oil companies, energy companies, leaving Belgium. They're not really leaving Belgium, by the way. They're leaving Europe. We actually have a trade surplus with Belgium. It's very interesting. $75 billion, over $75 billion back. I met 2 days ago, I mentioned this to you, with Her Royal Highness Princess Astrid, and she has been leading trade delegations from Belgium to the United States. She went over, met with thousands of small business entrepreneurs, large business men and women, and she's brought back about $10 billion to Belgium, which is great for U.S. companies. She also brought over 100 Belgian companies to the United States. And the follow-on of that amazing mission, and I salute Princess Astrid for the great work that she's done for the Kingdom of Belgium. We have about $30 billion of deals from Belgium companies who want to invest in the United States because America is hot right now. America is the country you want to invest in. So my focus is more on helping to close those deals. We have a great U.S. ambassador to the EU, Andy Puzder, and he is rocking it out over there with them and duking it out to help them understand. He's a businessman. President Trump put a businessman in there so he could explain this to them in a way that makes sense. There's a lot of people in the EU Parliament who haven't signed a check or owned a business or looked at a P&L statement of their own business. So I think we are trying to help the EU because we care about the EU's GDP. It's down 50% from what it was 10 years ago.
And so looking at this, the economic picture, I'd like to also just get your word on a political question, which is obviously we saw Belgium become a very sort of large protagonist in this discussion around frozen assets and the negotiations with Ukraine. The United States also takes a sort of view on that. I'd like to get your perspective on the degree to which the United States is having influence over the conversation on what to do with Russian assets. Do those Russian assets belong on the negotiating table for the United States within a peace framework for the United States? And if so, does that earn the Europeans a seat at the table to be part of that discussion more actively?
No, this is you're very smart, Oliver. This is a very good question. Two things. There are different schools of thought on the Russian sovereign assets that are being held in Euroclear. I spent almost a full day at Euroclear with the chairman and the CEO of Euroclear, and they explained to us, which your viewers probably understand better than maybe some other viewers on more of the non-business stations, but over $45 trillion is cleared through Euroclear, hence the name, every year. They clear the total of the world's GDP every 30 days. And if there were to be some uncertainty or instability in that flow of central bank money, it would be catastrophic results. So the end story of this is they have found another solution to help the EU provide resources to Ukraine. And this is a much smarter decision. And I commend Prime Minister Bart de Wever. I mean, he was really having to stand up for Belgium because this may have even bankrupted Belgium because Belgium would be liable if Russia were to sue later on. And the follow-up bottom line to your question is with the money still here and intact, it is a carrot and a stick for President Trump to be able to use. If the money was stolen or schemed or used or borrowed or leveraged, he would not have that ability. And I think Steve Witkoff, who's our special envoy in this situation, is very happy that that money is still in place to be able to use. You know, they never took the sovereign Russian assets of Hitler. We never did that. We held on to it, then we used it for reparations. The same with Emperor Hirohito's money in World War II. So this is a much smarter approach.
So you welcome the fact that it's still an active chip within those negotiations and again, continue the conversation around what to do with it.
Yes, it makes sense.
Yeah, well, Ambassador, thank you so much for your time. That's Ambassador Bill White, the U.S. Ambassador to Belgium. They're dealing with all of the issues from U.S. foreign policy on NATO to, of course, those frozen assets here held in Belgium.
Ollie, thank you very much indeed. Our Europe correspondent, Oliver Crook. Coming up, more Wall Street pushback when it comes to Trump's credit card rate cap.
When you look at this idea, you know, it will remove credit at a really important time from the people that most need it, and so there will be negative consequences across, you know, of credit availability across the spectrum of credit card users.
Big banks, big problems. We'll talk about it next. This is Bloomberg.
Welcome back. This is the opening trade. Let's talk about these broader markets then for 3 minutes. And we're joined by our Markets Live executive editor, Mark Cudmore, to do just that. Good morning to you, Mark. Lots of things to talk about today. Rotation within the US session, some of the metals stories that are dominating. I'll mention the metals and the commodities space for now, because this could be something that has an impact on the London market, of course. We travelled up a long way, it seems, on geopolitical tension, and now we retreat a little bit. So oil prices weaker, silver weaker. I guess this just illustrates how some of that story was about geopolitical tension and nervousness there.
I think that's absolutely right, Anna, and you're right that commodities are the exciting movement that we've seen so far today in markets in the Asia session. Oil particularly, and also silver, has just been completely crazy. Oil is the one that's obviously the more pure geopolitical play. You know, the structural story here is that we've got an overhang of excess supply, but that's a longer term story. In the short term, there's the problem about physical delivery, some short-term supply constraints compounded by geopolitical concerns. Now, some of those geopolitical concerns were eased up overnight. As you know, Donald Trump said they weren't likely to invade Iran immediately. That kind of removed some of that immediate kind of pressure that put in there. So oil prices have fallen heavily. And silver has been absolutely crazy. To silver, it's a slightly different story. This is a diversifying trade. It's people trying to get away from the US dollar to seek out other assets. We've talked about it a lot recently. Fundamentally, that's a good trade. The problem is silver's double in price from where it was only a few months ago. So it's gone just way too far ahead of itself. It's been an extraordinary bubble, and as you know, we talk about a lot in the show that if you find a bubble, run towards it and hop on board. You don't fight it initially. I think this is now the stage of the silver bubble where if you have been fortunate to be on board it, you maybe want to get out, but I think it's definitely too early to fight it. I'm not convinced that precious metals have topped out yet. They've just entered the kind of more volatile end game, but it might be the beginning of the end game.
Okay, so we'll keep an eye on that one. Hard to read what is going on. Mark, what do you make of the rotation in US stocks at the moment? Out of big tech towards small caps, this kind of run-it-hot economy story that some people are talking about in the States. Is that something that has got legs? Because muscle memory tells me that small caps run for a little while and then fall over.
You're correct, Guy, and you're kind of picking on me because I'm the guy who falls for every value trap going. So I'm the guy who always loves the small cap trade and always thinks they should come back and outperform. And of course, in recent years, I've been generally wrong on that until kind of last year. Maybe it kind of has been more exciting. It's certainly the end of last year. Small caps have started doing well again. So whenever small caps start doing well, I'm one of the Muppets who always get enthusiastic that this time it's sustainable. But is it really? Perhaps this time it'll be like you say, it'll fade at some point, and that's because the AI capex bubble is not finished inflating yet. That's still the big driver of markets this year, and while we're going to probably have some short-term volatility, that's not going to be the dynamic for the next couple of weeks. I think we've still got some more months to play out of that AI inflation trade, and that means growth will get another big kind of run again. From a longer-term point of view, I absolutely believe that small caps will continue to outperform, but I'm not sure if I hold that view on a 6-month horizon.
OK, small caps will continue to outperform. Bloomberg Markets Live executive editor Mark Cudmore, thank you. Remember, of course, you can get up-to-date analysis and insight from Mark and the fantastic team. Just go to MLIV Go on your terminal. Let's get your stocks to watch right now and bring in Chloe Mallet. Chloe.
Good morning, Tom. Earnings season is upon us, and Richemont is starting off very strongly. It reported sales way ahead of expectations, and those expectations were actually quite elevated, and that was thanks to really strong performance at Cartier, which was very popular with holiday shoppers this year. So this is most likely going to lift the shares this morning, and probably bodes quite well for the rest of that luxury sector that had already shown signs of early recovery at the previous earnings season. Moving on to Swedbank, which could also be moving higher today after the U.S. Department of Justice closed a money laundering investigation into the bank and decided to take no enforcement action. So this brings a 7-year probe close to an end, and that could lift the shares this morning. And from an investor's perspective, that's also very positive because that could mean more shareholder returns as well. And finally, we have got some potential read across from TSMC. TSMC being, of course, a bellwether for that semiconductor industry and reporting profit that came ahead of expectations there as well. So that shows there is strong AI demand despite those concerns around the sustainability of spending in that space. And that could read quite positively for those European chip stocks as well, including ASML in particular, because that is a key supplier to TSMC. So we'll be looking out for all of those today as well.
Okay, thanks very much, Chloe. It is a step from technology into telecom equipment, but let's talk about Ericsson. They have plans to cut around 1,600 jobs in Sweden, aimed at ensuring the company's competitive position. So we'll watch that, but more broadly, we're watching tech, the TSMC read across, and the luxury space.
Yeah, and no sign at all that any of that demand in terms of the AI hardware is easing at all, with that plan for $56 billion of capex spend, up from around 42. And 41 this year,
the only
50,
producer of the
59.
kit they need, isn't it, to produce these super high-end chips?
And I wonder whether or not they pull forward their expectations that their most up-to-date lithography machines will be put in place before 2027, which was their previous guidance from Christopher Fouquet at ASML. Coming up, it is the opening trade. We'll bring you all the market action. Stay with us. This is Bloomberg.
A couple of minutes to go. Thursday session is about to start here in Europe. In some ways, the tailwind actually out of the United States is a fairly positive one. We went out here, the market finished in the United States a little bit more elevated than where we were there. So you could argue maybe there's a little bit of a push. And US futures are actually quite positive right now. The interesting story actually from the US session point of view yesterday continues to be this rotation away from tech into the rest of the market. It's interesting that the equal weight is doing better than the S&P. So there's a big kind of rotation narrative which is worth paying attention to. Does that impact the European start of trading this morning? Let's find out. Tom.
Yeah, it's not just an index rotation, it's a regional rotation as well. And we'll get some analysis and views in terms of how much and to what extent Europe is benefiting. But certainly a key catalyst has been TSMC. We'll see the read across then likely for ASML, ASM and some of the other chip makers as well. So look for the likes of Siemens Energy, but also ST Micro, Infineon, of course, in Germany as well. So the Amsterdam futures are putting much higher on the expected uplift coming through for ASML, up 1% currently. Across the benchmark, gains of 0.4%. Again, after record highs yesterday for European stocks. FTSE 100 futures pointed gains of 42 points. Anna.
Let's talk about some of the sectors and individual stocks in focus as a result of news flow and corporate earnings and corporate trading updates. We've had results out from TSMC, and it seems even though we knew the sales numbers already, we've now got the profit numbers. The capex number, crucially, seems to be the thing that has excited a lot of people, and that could have a real read across into European tech names. ASML, of course, as you've mentioned, is one of those, or perhaps the most important. Richemont in focus itself, but the wider sector of luxury in focus after they did pretty well in the US, selling expensive watches, and in the Middle East. Ericsson certainly in focus as well, as they announced that they're planning some job cuts over in Scandinavia. Guy.
Okay, here we go. Thursday session about to start. What are we going to see? Tech looks like it's going to be on the front foot. Luxury looks like it's going to have a good day as well. What other action are we going to see today? The FTSE 100 not doing much. The GDP number today was a bit of a surprise, but you need to dig into the details, as Sri Kochagovidan did a little bit for us earlier on. Maybe not quite such a positive read. But does it change the Bank of England trajectory? Will that read through into house builders, etc.? We'll find out very shortly. Stoxx 600, not much. I'm excited about the CAC Courant this morning. Do we see a Richemont LVMH read across? LVMH does have some of the hard luxury stories that we're focusing on with Richemont. Or is Richemont just a Cartier story and a Taylor Swift story? We're about to find out. The CAC Courant is up by 0.4%, so it's outperforming. Is that a luxury story? We'll wait for the DAX. The AEX is going to be interesting as well. That's the chip story. If we're going to be seeing TSMC spending a lot more money, the places they're going to be spending a lot more money are kind of quite related to what happens in the Dutch market, and ASML is the beneficiary of all of that, so that could be positive. So we wait for Amsterdam, we wait for the SMI, and to a certain extent we wait for the German market as well. Tom, what do you got?
So on your sectors, top of the list then, tying into what you were saying about the luxury demand, Richemont and Taylor Swift, consumer at the top of the list so far. It is the biggest gain across your sectors so far, at least, up 1%. No surprise on the downside is energy, given the sell-off that we've seen in oil prices as President Trump halts, it seems, any potential military action, though that, of course, is potentially an option for him. But for now, those tensions have cooled. So energy is currently down as a sector the most, 0.8%. Basic resources, of course, you've seen a big drop in copper prices, silver we've talked about. Basic resources as a sector is down 0.7%. Anna, what is standing out to you?
Yes, let's talk about some of the individual movers that we flagged before the open. We're still waiting for ASML to open, so we don't have that component of the tech basket, so we'll keep an eye on that one. That seems to be trading halted, which suggests good things are in prospect. Let's just mention Ericsson. That stock just up by, in fact, I'm not sure that one's open, so I'll leave that one. Oh, it is, yes, up by 0.7%. And Swedbank, this, my producers were wisely suggesting I should have mentioned before the start of trade, but we have heard about that during the programme at least. But Swedbank advancing 6% then this morning as the DOJ closes a probe without enforcement, so bringing that long saga perhaps to some kind of close.
OK, semis are up. BE Semi is definitely stronger this morning. We'll wait and see what happens with the wider ASML story. Richemont is up by 2%. So we are seeing that luxury story coming through. I mentioned the fact that maybe house builders will do better in the UK. Taylor Wimpey is actually down by 4%. So we got that one. Well, I got that one the wrong way around. So that stock is down pretty hard. I was just checking to see if it was.
Is that an expectation? Do you think that the BOE rates will stay on hold for a bit longer? That there won't be as many cuts?
I don't know.
Maybe? Is that what's weighing up? Because the GDP data was a bit better than expected, and therefore maybe we're getting ahead of our skis in terms of expecting a March cut from the BOE. Is that?
Maybe there's a moderation. Actually, maybe you've got that the right way around, which is, yeah, maybe we push back. But it feels so marginal, doesn't it? And all the other data maybe points us towards maybe rate cuts coming for the Bank of England. But yeah, tech's doing reasonably well. Swedbank is doing reasonably well. Some of the airlines are bouncing back after a pretty tough day yesterday. Energy's down. So yeah, pretty much I think as we probably saw it coming into the market open.
Yeah, yields not really moving much on gilts on that subject. So up 1 basis point, it seems, pretty much across the curve. So we'll keep an eye on that one. Let's broaden the lens. Talk to Emmanuel Coe, who joins us, Head of European Equity Strategy at Barclays. Emmanuel, very nice to have you with us. We started the last hour of the programme talking about a rotation away from some of the big tech players that we've known and loved a lot in 2025. This is in the US, but maybe it has legs elsewhere. Out of those names into small caps in the States, into some growth stocks in the States. How would you expect that to play out in 2026? Is that a key theme for you in 2026?
I think broadening is a theme. I mean, this is following what was already last year a growing topic for clients. You know, we had 70% of MSCI world countries outperforming the US in 2025. So international diversification was a story last year, and broadening out of tech is a story for early 2026. I think it's very much about macro condition somewhat improving, and we are seeing pretty decent data outside the US, in Europe in particular. We are seeing catalysts like in Japan with the new election coming through, but also there's a valuation argument to look beyond tech. Now, I think earnings will be very important for the next leg of this broadening. So far, it's still very much sentiment, new money coming in the market, people looking for laggards and way to invest where they're not invested yet. But I think earnings will dictate the direction of travel for big tech.
OK, so broadening is part of the theme. Just a quick moment on the tech story. We have an opening price for ASML, and it looks as if it's trading substantially higher, up by 6% there or thereabouts this morning. So we'll continue to keep the tech theme in focus, of course. I want to talk about the role of the approaching midterms in US stocks and the US policy agenda, I suppose. In your notes, Emmanuel, you gave us a great chart which has, US stocks going higher. This was from last year. US stocks going higher. President Trump's opinion ratings not going higher and, in fact, retreating. And I wonder if this puts a focus on his policy-making priorities in 2026, maybe having satisfied Wall Street to some degree. Do we expect him to tap into all the ways that he can make life less expensive, more affordable for those who have not benefited from that rally in Wall Street stocks? Is that a policy agenda that we can invest into?
I mean, that seems to be the driver of markets so far this year. I mean, just in the last few days, we had so many announcements on, credit card fees, on Trump banning large defense companies paying dividends, or banning investor buying single-family houses in the U.S. So he's really focusing on addressing this K-shaped recovery and supporting mainstream. I think the challenge for the market will be to find out whether this affordability focus or push is coming at the expense of Wall Street. And I do think Trump still needs to get the equity market up because the wealth effect is too big as a driver of the economy. So I think we need to find a balance between supporting the low-end consumer, but also making sure the equity market is staying useful.
There's a clear tension there, then. What is the playbook for navigating that as an investor? A Trump administration that needs to see the S&P continue to grind higher, but also needs to equate for and provide for those at the lower end of that K-curve.
Look, I mean, firstly, I think the playbook is maybe not to overreact too much to some of these announcements. We are very skeptical, for example, about this cap on credit card fees to be coming through. I think we need the process to get there. It needs Senate approval, for example.
Does that mean banks in the US are a buy right now?
We would think so. Yeah, we would think that some of these rebels are buying opportunities. The noise will stay with us, so we're going to have to navigate a very noisy market. Some part of the market, maybe consumer is something you want to be focusing on as an investment team for this year. Trump will try to support the consumer, try to support the housing market. There can be investable team here. But I would say we are trying to focus on where we have a hedge, where we can take a view, which is very much fundamentals. And I think for the broader market, what will provide is very much bond market stability as number one, and earnings resilience as number two. And then around that, you're going to have a lot of noise from geopolitics that would have to be managed somewhat.
Why do I want to buy European stocks when the US economy when the Trump administration is going to try and run the US economy hot? Isn't there an argument? Like last year, we rotated away from the US, and there continue to be many arguments for wanting to maybe do that. But if he wants to run the economy hot, isn't that going to impact earnings? Don't I want to be part of that? How do I take advantage of that?
Well, I think there is a case to buy the stocks we like in Europe, and if we are seeing decent. Look, SML is up a lot this morning. It's 10% of Euro Stock 50. So a good stock having a good day can drive the market up. We like the banks, for example, which are a big chunk of the
European
index.
Banks.
European banks, which are a big chunk of the index as well. So it's not just about having a view on the region. It's also having a view on the stocks. And you need a few big stocks to perform well for the index to
do you get the impression
well.
that US investors want to invest in Europe?
I think US investors want to diversify more. It's not just at the expense of the US, but I think there is more willingness to look beyond the US, either because they're worried about tech dominance or policy risk in the US.
So is the Russell trade the same as the European trade?
Somewhat. I think Russell trade maybe is a way to play, more like a pro-growth policy agenda from the US administration, i.e. Fed to cut rate and the fiscal stimulus, one big bill kicking in. So that should be, benefiting the broader economy in the US and not just the big tech. But of course, there is a fair amount of investors who are willing to look outside the US to hedge this US policy risk we talked about.
Emmanuel, are there stocks within Europe that will benefit from the fiscal push in Germany or elsewhere, if there are other parts of Europe that have the money to spend, that are not well known? We've talked a lot about the defence names, for example, but are there others that are underpriced, you think?
I mean, to me, the asset class which is underpriced in Europe are small caps, which need a number of things to go well, to perform. We need liquidity to come back into Europe. We need growth to improve. We need sentiment to get better. But a lot of the small caps would benefit from a stronger domestic growth in Europe. And look at MDAX. MDAX has been flying in the last couple of weeks because there's a little bit of excitement again coming back in Germany. But in the grand scheme of things, MDAX has been a terrible performer over the past 10 years. So there is a potential for broader performance in Europe and some of these domestic growth proxy to perform if we start to see the data moving.
What assumptions are you making about the euro?
Look, we have actually a pretty non-consensus view at Barclays, which is dollar will be higher than it is today by the end of the year. So we have 113 euro-dollar forecast by December 26.
So why is that? Is it deflation trade? Does the ECB cut rates? Kind of what's the narrative?
No, I think the narrative is, firstly, we don't see the Fed cutting more than what is priced in. So we have two cuts from the Fed, July and December this year. We see a pretty decent growth environment in the US, and we're not completely buying into this end of US exceptionalism. Yes, there is demand to deploy capital outside the US, but we still believe big tech, Max 7 will somewhat backstop the US market and the US dollar.
Right, and does the FX theme play into your thinking? Because some people, I saw one note, for example, this morning saying, yeah, it's overblown to talk about sell America, but maybe the dollar suffers. And then maybe that's, I know that your equities is your focus, but maybe that has an impact, your expectations around FX has an impact on Stoxx for this year.
Look, and I think a lot of this broadening or diversification outside the US is because of FX, right? So whoever is based in US and bought European equities last year without hedging the currency did amazingly well. So I think the fear of a dollar debasement is playing in favor of non-US equity
But if
market.
I want to diversify out of the States, why don't I just buy China? China, that looks like it's got some of the AI themes that are still running. I'm buying cheap AI. It's an economy that looks like it's got quite cheap valuations. Where do I diversify to, and is Europe the right place to diversify to?
We are overweight Japan. So, we are market weight Europe versus the US. We see some support for Europe, but we don't really see Europe strongly outperform. We think Japan has a pretty decent growth policy trade-off, but we are hedging the currency on this one.
Okay, and is that dependent? That Japan call, is that dependent on Takeichi building out her position within getting more, essentially getting more power on the back of this election? Because it could all go wrong. I mean, do you end that trade on Japan if she doesn't succeed at the elections to build out her mandate?
We turned overweight Japan before she called for a new election earlier this week, right? So the view was very much Japan will run a pretty reflationary policy agenda, but again, that will come at the expense of the currencies. We are hedging the currency, so a weaker yen is a pretty good story for exporters in Japan. And if on top of that you are seeing domestic stimulus, that should help the banks. So you have a broad-based performance that could help the Japanese markets. Of course, you have the risk of a more volatile cross-asset environment with a bond vigilance, obviously, on alert. And if the market is starting to question this, fiscal dominance or fiscal repression, that could start to hit the equity market.
Manuel, nice to see you. Start of 2026 looks like it's going to be a fun one. Manuel Cope, head of European equity strategy over at Barclays. Let's talk luxury. What is happening in the European luxury space this morning? Richemont is a big theme. LVMH is benefiting as a result of that. It's up by 0.7%. Let's dig further into that story. Chloe's here with the details.
Good morning. Indeed, it is a good day for luxury today after Richemont reported better than expected sales. A lot of that had to do with the popularity of Cartier jewelry, and it has the likes of Taylor Swift and Timothée Chalamet to thank for that. And those good results from Richemont is also driving the rest of that luxury sector today. We have got Burberry, Kering, LVMH all higher this morning. All of those will be reporting in the next few weeks, so we'll see if we've got a sustained trend there. We're also in the green for the tech sector after TSMC reported better than expected profit as well. And this is signaling that there is strong AI demand despite concerns around the bubble. And so we have got that driving that tech sector this morning. ASML and ASM in particular are very strong. Swedbank is also in the green because the US DOJ closed a money laundering investigation without taking any enforcement action. So that means that Swedbank will be able to return that excess capital to shareholders. And that is something that investors are quite keen on. And we are up about 4.3% for that bank. It's not as good of a day perhaps for Taylor Wimpey, which is down this morning after lowering its 2026 margin guidance. So this is an echo of what we saw with another house builder, UK house builder, Vistry, yesterday. It seems that the budget uncertainty has really weighed on the housing market in the UK, and perhaps it is not recovering as quickly as expected. And finally, Repsol is also in the red this morning, down 6% after a trading update that was seen as quite mixed by analysts, and it was also downgraded to a sell rating by RBC. And so we are seeing that double whammy really weigh on the shares this morning.
Chloe Millet, thank you very much indeed. Some really interesting moves under the hood in terms of some of these individual stock moves today. Coming up, we'll get more in terms of what's happening in the luxury space. Talking of interesting moves, Richemont smashing estimates on Cartier holiday sales. Going to bring you more on that and the broader luxury sector. That's coming up. This is Bloomberg.
Welcome back. You're watching the opening trade. The opening trade is behind us, and we are 80 minutes into the session. There's some amazing stock stories out there this morning, basically all based around the fact that TSMC is going to up its capex. ASML is up by 6%. ASM International is up by 10%. ABB is up quite strongly. I'm not sure that's anything to do with it, but the one below that, I'm not sure it's VAT Group or VAT Group. Anyway, something to do with tax. It's all to do with industrial pumps and bellows and all kinds of exciting things like that that basically go into the semiconductor trade. It is up by 15%. So this TSMC story is really rippling across Europe and providing a real tailwind for some of these European markets, which at an index level look much more mixed, but below the surface are seeing some really big moves.
Yeah, really impressive. The things that the AI build-out needs, and the granular detail that we get into. So let's talk about where we are on something else that's moving a lot in markets today, and that is silver. It went up a lot over the last couple of sessions. It's now down by 3.9%, and this is perhaps to do with geopolitics. It's perhaps to do with trading tariff policy out of the US. Let's talk about all of that. The sell-off occurs as the US holds off from imposing import tariffs on critical minerals. Joining us now is Martin Ritchie, Bloomberg's metals and mining reporter over in Shanghai. So Martin, how much of this drop is driven by fundamentals versus technicals? I'm not sure what which bucket tariff policy falls into these days. I guess it's fundamental news flow. What are you looking at when it comes to the drivers?
We've seen silver on a pretty spectacular surge since the beginning of this year. It's really rocketed up, and it went up, above 90, which was really unforeseen levels by most people. And I think when you've got that kind of velocity of gain, there's always going to be a pullback, especially if there is actually some physical news that affects the market. And what happened yesterday was Trump said, we're not immediately going to put tariffs on any critical minerals, including silver. We're going to negotiate bilateral supply agreements with other countries. We're going to see what we can do to invest inside America. And the reason that's important is because it has been one of the biggest drivers for silver over the past months, because metal that could have come out of the US to sort of solve tightness in the market elsewhere was kind of staying there because of this expectation of tariffs. So with that gone, it kind of immediately dampens sentiment in silver. But that said, it's not a big move downwards today. It did go past 5% at one point, but it's still fairly modest. Silver prices are still very high, and there's still that kind of backdrop of heightened interest in precious metals generally because of uncertain geopolitics, because of the Sell America trade that we've all been talking about so far this year. So it's still a kind of very uncertain environment for silver and for gold.
You've got your ear firmly to the ground, and I'm wondering what you're hearing, what rumblings you're sensing. Are we going to go higher? Is 95 possible? Is 100 possible when it comes to silver?
I think people are already, certainly before the Trump tariff announcement, people were definitely positioning for 100 plus because silver is a relatively small market, and when you get a kind of structural change in investing, the kind of thematic interest we've seen in the past week, and investors looking for ways to trade that Sell America or the AI thematics, when you get a lot of investors coming into a small market like silver, it tends to have outsized impact, and it kind of like distorts the usual pricing dynamics. So, that's why 100 is seen as fairly realistic, and I actually had Citigroup the other day saying their target for the next 3 months, within the next 3 months, was 100. So that's the levels that can be talking about. Having said that, it's been extremely volatile. Could also go the other way if there's some more kind of turnaround in sentiment, for example, in AI and equities. That could also turn around the metals markets that have been very hot in recent weeks.
Yeah, 89.50 right now on silver, down 3.9%. But again, in the context, as you say, of that significant run-up we've seen. Bloomberg's Martin Ritchie. Martin, thank you very much indeed. Let's get the luxury space then from precious metals to luxury. Richemont shares on the move, modestly. The Cartier owners' sales jumping in the final months of the year as holiday shoppers splurged on jewellery. Bloomberg opinion columnist Andrea Felstead joins us now. It was a strong set of numbers. Investors rewarding to some extent, just up 0.3%. What for you stood out in terms of the Richemont numbers and how we should think about things going forward?
It's certainly good news for luxury that Richemont has delivered such a strong result, particularly if you cast your mind back to this time last year, post the US election. There seemed to be sort of an unleashing of spending. Luxury sales were back. Everyone was expecting, a return, not necessarily a return to the bling boom, but definitely a gradual recovery. Then we had tariffs, and that really sort of ended that. So they were up against quite strong comparison. So the fact they've still done pretty well, beaten estimates, is good. We shouldn't get too carried away. Jewellery has really been shining. It's been a real winner from this luxury downturn. The price of handbags have gone up so much that a Cartier Love bangle looks better value than a Chanel bag. So it's definitely in the right place. And the fact that China seemed to be back a bit, growth China definitely seems to be stabilising, improving. That's good, but again, shouldn't get carried away on that recovery story.
Taylor Swift likes a square watch. Is that something to do with it? Is the fact that metals prices are up sharply also something to do with it? Kind of just put these other things into the mix.
Yes, Cartier watches have just been on a tear. They've just been getting more and more popular. We are seeing a shift in the watch market from very big chunky styles to dress watches tending to be gold and square to some extent. Taylor Swift has got one. It's been the millennials' favourite. What was interesting is the wider watch market the wider watch division looked to improve, which we haven't seen so far. They've been making efforts in brands like Jaeger-LeCoultre. So, perhaps that is coming back as well. Maybe people were buying because they were worried more tariffs were coming, more price increases were coming. But for some reason, that broader watch market was also showing an improvement.
Let's find a moment just to talk about Saks. I mean, these big names in fashion retail, luxury fashion retail, so filing for bankruptcy, and no doubt many of the suppliers fearing what they might get or not get as a result of that Chapter 11.
Exactly. We've seen some brands, Chanel, for example, Kering, which owns Gucci, are among the creditors. They are owed money, but it's going to be, obviously it's never good for anybody. But I think, they are bigger companies, they are, well capitalised, they will be able to withstand this much more than the smaller brands who may be owed less, but for whom it is much more make or break.
OK, so we'll watch where that ripples to. Andrea, thank you very much. Bloomberg opinion columnist Andrea Feldstedt with the latest on the luxury sector. That Richemont story then has been rippling through these markets. The CAC 40, incidentally, pretty flat right now. We often look to that to see where luxury shows up. Coming up on the programme, we will pivot once again to the tech conversation, but we'll take a look at the UK startup scene and VC landscape. Emily Turner, will be with us, CEO of HSBC Innovation Banking UK. That conversation next. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session. The benchmark then here in Europe up 0.3%. So building on the record that came through yesterday. But this is not telling the full story, because the full story is all about tech. TSMC, the impulse coming through there in terms of the capex spend and the beat, and that is lifting the tech sector here in Europe. The DAX is a little softer by 0.1%. The CAC current over in France up just 1 point, and the FTSE 100 also flat. But again, there's a lot of interest when you lift the hood on these indexes, Guy.
Let's do that. Let's talk about what is going on below the hood. So 320 stocks up, 259 down, which is interesting, actually. You've got more stocks up than down, and in some ways you need to look at the weightings and kind of what is going on here to fully, as Tom says, understand what is happening here. Volume, though, is the real number that stands out to me. This is a market that is involved today, and you are seeing big volume going through. And the reason for that basically is that TSMC is going shopping. And when TSMC goes shopping, what does it buy? It buys lithography equipment from ASML. It buys chips and all the kind of equipment that goes with it from ASM International. VAT Group. What is VAT Group? It's not a stock that we talk about an awful lot. It does pumps and bellows and all the kind of kit that you need in terms of building some of these chips. And all of these stocks are doing incredibly well this morning. ASML's off its earlier highs, but it's still up by 5.2%. Now, ASML International's up really strongly. VAT Group's up really strongly. At the other end, though, and this is kind of the balancing factor, there's a bunch of heavyweights that are lower this morning. Novo's one of them. It's down by 1%. The oil stocks are, though, lower. Oil has come down overnight. Shell is responding to that. BP's responding to that. BP down by 2.3%, Anna.
Yes, absolutely. Let's get up to date with some of the other news flow we're following, and it links with some of those market moves. President Trump has signalled he may hold off on attacking Iran for now, after getting assurances that the government in Tehran would stop killing protesters. President Trump says he was given that information from what he calls, quote, very important sources. The White House earlier confirmed the president had been briefed on a range of options for strikes on Iran, including non-military sites. An exploration mission of 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security in the region and respond to US threats over the island. Meanwhile, Denmark's foreign minister says a, quote, fundamental disagreement remains with the US over the Arctic territory following a meeting with top US officials. And a crew of 4 astronauts have departed the International Space Station, the ISS, earlier in NASA's first ever medical evacuation. NASA first acknowledged the medical episode last week, postponing a spacewalk due to an undisclosed health issue. The astronauts are expected to splash down off the coast of California in a SpaceX Dragon capsule in around 10 minutes. Time, control rooms associated with the ISS are waiting for that landing, waiting for that splashdown to take place then, Tom. So we'll monitor those pictures as they come in. And I don't want to worry anybody, but it's the first time in 26 years that the ISS has been unstaffed.
Yeah, we don't know details about the medical issue. Apparently, the control of the ISS, though, you can take a step back and take a deep breath now, Anna, because control of the ISS has been handed over to some Russian cosmonauts, apparently. So they're now in control of the ISS. The UK, it has a couple of spaceports, questionable success there, but there is some investment. And the UK does play a significant role in what's happening, of course, in tech and in AI. On a day when not just space, but what's happening in terms of the tech stocks really drawing our attention. Some significant gains, as we've been talking about,
pivot.
on the back
of
what's
trying, isn't he? I'm just trying to work out where he's going to go with it.
Help me out here, guys. Let's bring in at this point someone who's really well placed to talk about what's happening in terms of checking the pulse of the UK tech sector and the UK ecosystem, of course. And let's bring in Emily Turner, of course, from HSBC Innovation Banking UK. Emily, good morning. You've been crunching the numbers, you and the team, in terms of the funding impulse into UK tech in 2025. When we do question what role the UK and Europe is going to play in terms of this AI revolution that, at least on today's numbers, is showing no signs of abating, how well positioned is the UK?
Yeah, thank you. This is a global story, it's a European story, and importantly, it's a UK story. So as we've seen in the numbers, and we certainly felt all of last year, UK innovation economy grew by 35%. We're not quite at the levels that we saw in 2021 and 2022, but this is the first time in 4 years that we've seen the innovation economy grow. That's outpacing the global growth by nearly 8%. And across this, what we've seen is it's a real change. I think the question that we're all asking ourselves, and certainly I am, is now different. And I think it is. And there's a number of reasons for that.
And it's interesting you talk about 2021, because that, for many in the VC world, is a year of irrational exuberance. In terms of the flows that you're seeing now and that uptick for 2025, does that continue into 2026? And where is that most of that money? Is it all about AI? And is that crowding out the fund flows?
So I'll start with the second part of your question. Yeah. So a lot of it's about AI. A third of the money we've seen going into this market last year was in AI. That was 80% up year on year. But that's not the whole story. There's a whole two-thirds of the market. Now, I should note that when it comes to AI deals, if it's either early stage, breakout, or late stage, they've been commanding larger rounds and higher valuations than not. So, that is undisputable. And I think that is poised to continue going into this year. But if we look across other spaces in the UK, and I'll call out that fintech is the largest sector in the UK and was last year. There's a lot of other places as well. So it's we should call out fintech, we should call out biotech, energy, and a number of other sectors where the UK has real strength.
The UK is quite good at technology. At a university level, there's a lot of really great stuff going. Why are we so bad at it? What does the government need to do? If you were sitting down, if I was Rachel Reeves and you were talking to me, what would you be telling me about what I need to do next?
So I don't think the UK is bad at technology.
No, it's really good at technology.
Yes. So the UK technology market is worth $1.3 trillion today.
Yep.
Roughly half of that is in private companies.
Right.
A quarter of that is in public companies, and a quarter of that is in companies that have been acquired by companies outside the UK. In addition to that, and we're only one of 3 nations in the world that has a $1 trillion technology market.
Yep.
If I add to that, and to your point, 5 of the top 10 research universities are here, and we do better than any other country in Europe at turning those into commercial outcomes. So
why does it feel like all the innovation comes out of America?
So first and foremost, more innovation is coming out of America. That is undisputable. The size of the VC market in the US and in China is larger than the UK. The UK is third to that. But the UK is now larger than Germany, France, the Netherlands, and Switzerland combined, which are the top 4 in Europe. And we have a lot to be proud of. There's not every sector that the UK is leading in, but when it comes to fintech and when it comes to deep tech, and back to Tom's question on where do we see the world going, those are 2 sectors that are poised to continue to grow and, in theory, outperform this year, and the UK is very well placed to capture that.
Emily, good morning. Does it matter then how you went through the stats about how many of these UK tech companies are in public hands, in private hands? Does it matter? Maybe it depends who you are as to how much it matters. I remember hearing private markets people arguing that actually this is exactly what they're for. You put a lot of money in at early stage, away from the public gaze, allow tech businesses to try things out, move fast and break things, and then they list later. Does it matter where they're held?
Ultimately, a high-functioning market requires capital to be coming in at all stages from both public and private sources. And so, yes, we need to, this is a company that is not leading in the public market space. Overall, we are very optimistic about public markets going into this year and public markets in this country. But that said, that's not the entire story. And what we've already seen this year in terms of acquisitions and some fundraising, early days in January, but going into this year, tell us that access to capital is something that we will continue to see as a strength and growing in this country.
Are we going to see a lot of big global businesses going shopping in the UK if there's still a discount maybe attached to some of those UK assets?
Undoubtedly, big global companies want to shop everywhere. When I think about the best companies in the world, they look to solve everywhere problems. And there's great research, development capabilities, importantly talent here. Plus, if you add to that the time zone and rule of law. So no doubt the UK will be a great, attractive place for people to make acquisitions. But that's another part of the flywheel that I think will continue the growth that we've seen.
Emily, great to see you. Thanks for stopping by to see us and bring us a positive story. Love it. Out of the UK. Emily Turner, CEO of HSBC Innovation Banking UK. I've got half an eye on what is happening with this NASA story. Splashdown is imminent, very imminent. It looks like it's going to happen in the next kind of few seconds. So this is part of the evacuation of the International Space Station. Never seen this before. As Tom says, the Russians are now in control of what is happening up there. But we are seeing, looks like a fairly successful splashdown happening within the next couple of seconds.
Parachutes have been deployed.
Yep.
As we can see from these live pictures. So this is Crew 11, the astronauts known as Crew 11, and they're meant to be splashing down, as you can see as well, off the coast of California in just the next few minutes, and presumably they'll be sending out boats and aircraft pretty quickly to pick them up. And this again is because there is some medical issues.
Yeah, absolutely. As you were saying earlier, there are an undisclosed medical condition, so we may or may not, I suppose, get some clarity as to what has prompted this. But this leaves the International Space Station empty. We had astronauts from various countries actually were present on the ISS, and they were expecting to stay until the middle of February, but had to be brought back earlier as a result of this medical situation. Has it splashed yet? Just watching a fairly grainy image.
No, I'm surprised there's not better pictures, actually. I would have thought that, that probably is a factor. And that probably does actually explain it. Yeah, I would imagine. So this is the ultimate sick note, isn't it? I've got to come home. I'm really sorry. I'm not feeling very well. And basically we've got to evacuate the entire space station as a result of that.
For the first time in how long was it, Hannah?
26 years.
26 years.
Well, I mean, it's only been there since, the late 90s, hasn't it, the space station?
Yeah.
So yes, now it's empty.
Okay.
And it'll keep on spinning, travelling around the planet many times a day, 16 orbits of the planet every day. Maybe we'll keep an eye on those pictures and wait for it to splash as we talk about other tech themes this morning. Let's check in on the European chip stocks as TSMC posts a fourth quarter profit that beats estimates and earmarks as much as $56 billion in capital spending for this year. what should we focus on? Let's bring in Matt Bloxham, shall we, from Bloomberg Intelligence, who can help us answer that question. Good morning to you, Matt. So markets seem to have focused. Is it on the CapEx number? Is that where the market's attention is, and where, to use Guy's phrase, TSMC is going to go shopping?
Yeah, I think so. So the CapEx number combined with what they're talking about on revenue growth. So, first quarter looking at 38% year-on-year growth. The market's at about 30%. I say that CapEx number, at the midpoint, about $54 billion for 2026, compared to $46 billion consensus. So as much as a 22% higher number. And that's essentially a strong signal that their key customers, like NVIDIA, are going to continue to see strong demand. And where's that demand coming from? It's coming from the big hyperscalers. So I don't think it's a big surprise. If you look at even our own BI forecasts about hyperscaler capex for 2026, it's in the kind of $500-600 billion range. So it's kind of maintaining, if not increasing, the momentum we've seen in 2025. I think the bigger crunch for the whole industry comes second half of this year into next year, where our enterprises are doubling down on their AI investments. That's what's needed to kind of fuel what I've always called the natural demand for AI over the midterm. But in the short term, we have this kind of structural shift in investment in AI. TSMC is the leading manufacturer of AI accelerator chips, particularly on behalf of NVIDIA. They'll see kind of a very strong supply for Apple's high-end smartphones too. So in the near term, kind of very robust outlook.
They're going shopping in Europe. They're going to buy all kinds of... presumably, ASML is the biggest beneficiary of this. It sells the high-end, super high-end lithography kit that they need to make all these chips.
Yeah, absolutely. ASML, it's kind of integral to their delivery to NVIDIA. So I think, there's clearly going to be more demand from TSMC for the ASML kit. I think what's also interesting is, TSMC's capex into 2026 and beyond, to some degree, is kind of underpinned by this need to kind of create supply chain resilience. Obviously, we know very well about Donald Trump's push to kind of make things in the US, and they're investing in the US, but they're also going to invest in Europe, including in Germany. So they're going to kind of be distributing their manufacturing capability globally. There is clearly a little bit of concern from the CEO about how much they're spending. He said, is AI real? He's not sure either. He hopes it is. Otherwise, spending this amount of money is going to be a problem for me. And we have seen before, these kind of big swings in...
It's quite a cyclical industry.
Supply constraints and supply gluts. And I think if the AI story doesn't sustain into 2027, you are at risk of having a bit of a supply glut.
Yeah, it's a global moonshot at this point still, and it's clearly making the head of TSMC sweat a little bit as he puts down these numbers on capex. You mentioned enterprise, which is interesting. Is this the year where we start to get a kind of stress test in terms of the rollover of some of these software contracts, and whether there's essentially kind of the sector equivalent of cord cutting? I mean, there has to be a stickiness to these new AI software platforms. And there has to be an evidence that enterprises are renewing their contracts.
Yeah, and expanding them. I think a lot of what happened in 2025 was probably AI pilot phase. All of the big consulting firms, Accenture and the like, have made a lot of money from going into firms and saying, look, you need to have an AI strategy. You need to start deploying this thing, what it's like in real life. And this is to some degree start of the crunched period for CEOs and CFOs. Say, okay, how is this actually delivering? Where does it make sense to double down and invest more? Where does it make sense to kind of pull back? So we're going to see a lot more of that happen this year and into 2027, and that's where the spending will come from to sustain these huge investments in data centers, and what's essentially underpinning the kind of the big valuations we see for the likes of Google, Meta, and private market valuation of OpenAI.
Yeah, and NVIDIA getting closer, it seems, to shipping those H200s into China, because they've now come to this arrangement around the tariffs as they get shipped first into the US before then being shipped back to that region. Matt Bloxham from Bloomberg Intelligence, thank you very much indeed. ASML, of course, one of the key beneficiaries, up 5% now, having been up around 7%, so easing a little bit, but again, still significant gains for that chain maker. Let's cross over, or at least remind you that Bloomberg's Annabelle Drulas will be speaking to TSMC's Senior Vice President and CFO. That's an important conversation following its Q4 earnings report. That interview is going to be out tomorrow, Guy.
Don't anybody ever say that I can't multitask, because I've been watching the amazing pictures coming out of California, and you've got the crew capsule, as you can see, it's clearly very hot. And
we can't see much, but we can see that.
Yeah, it's clearly very hot. It's just come through the atmosphere, and it's now splashed down. And we will wait and find out exactly what has caused this medical emergency. But some quite cool pictures coming out of California. Up next, we're going to go back to the banking story. What is happening? Market not particularly happy thus far with what Wall Street has delivered. We're going to find out why. This is Bloomberg.
Welcome back to the opening trade. We are 49 minutes into today's session, building on the record highs of yesterday with gains of 0.3% across the European benchmark. And it's tech that's doing the heavy lifting, given the TSMC earnings and the capex impulse that's coming through, lifting the likes of ASML, ASM, BE Semiconductor and beyond, with very significant gains there. On the downside, of course, is energy down 0.9% on that drop in oil prices. Let's show you some of those individual names. They're on the screen right now. Some of the key gamers, VAT Group, which provides some of the hardware that goes into data centers, up 14.5%. Then you have the likes of ST Micro and ASML, of course, with the lithography machines surging a little over 5%. Anna.
Let's talk about some of the geopolitical themes that have and have not been moving markets in some cases. An exploration mission, it has been called, of 13 soldiers from Germany will arrive in Greenland later today as European nations work out how to ensure security or how to demonstrate seriousness in this region and respond to US threats over the island. Denmark says a, quote, fundamental disagreement remains over the Arctic territory following a meeting with top US officials. Donald Trump, meanwhile, is doubling down on his position regarding the island.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
We need Greenland for national security, so we're going to see what happens. We have a very good relationship with Denmark, as you know, we'll see. But, we're doing the Golden Dome, we're doing a lot of things, and we really need it. If we don't go in, Russia's going to go in and China's going to go in. And there's not a thing that Denmark can do about it, but we can do everything about it.
For more on this, how this continues to evolve, this story, let's speak to Bloomberg Chief European Correspondent for Bloomberg TV, Oliver Crook, who is with us covering this story. And we heard you talking about this earlier. Give us the latest then on the Greenland situation, Ollie.
Yeah, that's right. After that Washington, D.C. meeting between the foreign ministers of Greenland and Denmark with Marco Rubio and J.D. Vance, the Secretary of State and the Vice President of the United States, no breakthrough was found. As you say, that was sort of the main line that we got from them, which is that basically there's still a fundamental disagreement and nothing has yet been resolved. What they have vowed to do is to assemble that working group. And again, I thought it was sort of notable that the Danish foreign minister that said that the working group was to be established to find out if there is a common way forward on Greenland, because as it stands right now, as we've heard from Donald Trump, we're still in sort of escalation mode over this rather than de-escalation mode. To that end, we've had some solidarities from some other European countries, the Germans, the Swedes, the Norwegians, the United Kingdom, both sending really sort of very small military delegations to Greenland, 1 or 2 people for many of these countries. The Germans are sending 13. But this, I think, is more to send a sort of message of solidarity to sort of potentially create a diplomatic deterrent rather than a military one. But we're still going to have to see if there's a way, a sort of off-ramp here. The United States still very much saying they want to have Greenland.
Ollie, earlier in this program, you had a conversation with the US ambassador to Belgium. What did he have to say about European concerns, about US reliability as an ally?
Yeah, exactly. I mean, obviously Belgium is obviously a nation that is important within the European Union, but it's also home to the European Union and to NATO. And I asked him about that, about basically how reliable is the friendship from the United States, and really what is the nature of that friendship, and what do you tell to European diplomats and policymakers when they ask you that question? He was really quick to say that, listen, the United States is fully committed to NATO, that Trump is a big ally of NATO, and that he's somebody who really represents the interests of NATO. He sort of speaks to the fact that Trump forced that that NATO spending increase last year that we got from European nations. But really his focus is going to be more on the sort of economic side of things for the United States and for Belgium and for the EU, we should say. And we should say that during that interview, he talked about trying to cut regulation, to cut focus economic policy in Europe in order to boost growth. He said during that interview in 1990 that basically the European Union, their GDP has diminished by 50%. What I think he meant there, and that's articulated there in the chart, was the share of global GDP that Europe has had since 1990, which was at about 26%, about the same as the United States, has now come down to about 14%, while the United States has managed to stay more or less stable. Now, that is an issue that obviously Mario Draghi has highlighted, that this is the competitiveness of the European continent, but it should be put in the context that a lot of that has to do with the fact that a lot of other regions around the world are growing very dramatically, namely China, which back then was about 2% of global GDP, now is 17%. And we should say that the long-term trend has been also for the proportion of U.S. GDP from the United States to also have declined materially. Back in 1960, it was about 40%. Now it's about 26%. But it is true to say that the Americans have held on to their share of global GDP since 1990, and the Europeans have diminished substantially since then.
Ollie, thanks for the update. Greatly appreciate it. Bloomberg's chief Europe correspondent, Oliver Crook. Let's turn our attention to what is going to happen in the rest of the day. Banks are back in focus. We've already had some numbers. We're going to get some more today. Not that impressed Wall Street with Wall Street so far. Let's find out what's going on. Charlie's going to join us again with a preview of what today's session is going to look like.
Well, guys, it's getting a little late in earnings season for the narrative that we've heard build throughout the week of questions about this bank rally. But if there is going to be one change, if there's going to be a chance that this narrative change, it might come today because we've got arch rivals Goldman Sachs and Morgan Stanley reporting. They are expected to show some real strength on that investment banking side. We heard management at Goldman Sachs talk about how there was a pipeline at the end of the third quarter that was pent up. Let's see if that spills out. But we're looking for growth in those business units at both banks, north of 20%. Also expecting to see really strong trading here. Not such a big number on the Morgan Stanley front, but that's because of a difficult comparison to the year before. But again, as you mentioned, this is just not translating into the market over the course of the week. If we take a look at some of the share price performances of the banks that have reported and that stand to report today, you see a lot of red on the screen. So a lot of uncertainty, despite some really blowout numbers. And I want to bring out some of those numbers that we've seen across the week. Yesterday, we had Citigroup, 84% growth in the fourth quarter in financial advisory. That is, you got to check your screen there on that. Bank of America, their equities traders had their best fourth quarter on record. And then just looking across the board at the fundamental situation here, charge-offs were down 16% at Wells Fargo. So you see the strong consumer, you see these strong numbers coming from the bank. But again, questions about this bank rally. We will see how those get answered later today.
Charlie, thank you very much. Bloomberg's Charlie Wells with a preview of some of the things we are waiting for on the banking sector. Speaking of banking, later, JP Morgan CEO Jamie Dimon will be speaking with Bloomberg's David Rubenstein. That's at 8 o'clock London time. We heard a lot from him yesterday. Of course, we've continued to focus on what he has to say. And all of this coming ahead of Davos. It is Davos week next week, the World Economic Forum on the slopes in Switzerland. Our coverage, of course, throughout next week. That'll be certainly a big feature of our programming. That is it for the opening trade today. The Pulse is up next. This is Bloomberg.